Well, good morning, everyone. Welcome to Long Verticals and Diagonals. Connie has a well-deserved day off today. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab, and I have the privilege of filling in for her. And this is a class that I used to teach. I love teaching this class. So it's kind of nice to be back in the long vertical and diagonal saddle again. We do a lot of long vertical trades in our Trading a Smaller Account, where we meet on Mondays and Fridays and move at a fairly quick pace and do lots of example trades. So that's what we're going to do today. We're going to do a couple of things. One, we're going to review some of the trade management things. Connie has been doing a lot of example trades with diagonals and talking about management of those diagonals. So we're going to review some of those because Connie, before she left, gave me some very specific notes to share with you. And then we're going to look at the long vertical side of the house, and we're going to do some long vertical trades. Okay, so we're going to place a bunch of example long vertical trades, or several, and then I will follow up on those trades in our Trading a Smaller Account class. So we're going to kind of marry our Trading a Smaller Account and our discussion of long verticals together today. And we're going to position size as if we had, a $25,000 account. So if you are not following Ben and I in the land of X, you are doing yourself a disservice. We have the privilege of having the fabulous Mr. Ben Watson with us, riding shotgun in the chat today. He'll answer questions that you have as we go along if I can't quite get to them. And he knows verticals inside and out, so he's a good guy to have on board with us. At Ben's handle, if you are not following him on X, is Ben Watson CS. Mine is Barb Armstrong CS. We are also both now in the land of LinkedIn and are posting content there on a regular basis. So find Ben and I over on LinkedIn as well. And just before we get into the thick of things today, know that options carry a high level of risk and aren't suitable for all investors. We use the paperMoney software application on the thinkorswim desktop platform to place our example trades. And it is a brilliant place to learn, to hone your skills, to make sure you have a trading plan, understand it, understand the mechanics of how to place trades in the system. Know that there are some nuances and differences. One is that short option positions will never be assigned early in paperMoney. That can happen in a live account. I've seen it happen. Okay, so if you have not ever attended a live event, you're going to want to check those out. We're also going to have some virtual events coming up. And so, where would you find those? I'll show you that in just a minute. And then we're going to look at some long vertical strategies. We're going to look at management of some diagonal option strategies and place some example trades. So that's what's on the menu for today. Now, if you want to see what is coming up, my friends, you can simply come to schwab.com/coaching. Okay, and if you come to in-person events, you can see we are all over the country. But next weekend, so Friday, March 27th and Saturday, the 28th, we're doing a 2-day technical analysis and option strategy workshop. Ben Watson will be there leading the charge on stage. Kevin Horner lives in the Denver area, so he'll be there as well. Then we're going to Dallas for advanced options. That's a 2-day event, and then all the way to the East Coast to Boston. And you can check out the schedule. The schedule is posted here for the entire year. If you come to live webcasts and virtual workshops and unclick the webcast, you can see that at the end of April, we have a virtual workshop. It's a 4-day workshop, Monday through Thursday from 5 to 6:30 Eastern time, that you can tune into from the comfort of your home. Okay, so you may want to check that out as well. So lots of cool stuff coming up. And then we are going to talk about two types of long verticals today. And if you come to Trader Talks, if you haven't already subscribed to the channel, you may want to hit that button in the bottom right corner to make sure you do that. If you're new and here for the very first time today, you might find this to be a helpful resource. So my default, it comes up as playlist. And if you scroll down, I've created a folder called the Trade Management Mini Sessions. And if you look at this full playlist and scroll down, the first group is mini sessions. And these are like 2 to 5 minute sessions on individual candlestick patterns. So if you're new to charting, those will be handy. But what I want to point out is that there is an example trading plan that we created. I created doing a short video, one for long call verticals, and then there's one for long put verticals. And it covers kind of the 5 components of a trading plan: what to buy, when to buy, how much to buy or position sizing, when to sell, when to exit, both if the trade goes for you or against you, and then what your routine might be or should be. Okay, so, this is just another free resource for you to take advantage of. Okay, so I wanted to be sure that you guys were aware of that, because especially since I don't, normally teach this class. Sorry, I don't know where my thinkorswim went. I've had some gremlins in the system. If you guys have been following me lately, just stuff is appearing and disappearing all over the place. I don't know what to tell you. So just give me a second here. And I had thinkorswim up, honest I did, and it just decided to leave me. So let me just re-sign in, and then we'll have a look at things. So Connie, before she left, she sent me this list. Just one sec. She sent me a list of the trade management she had done. So if you're here for the very first time, these may not make a ton of sense to you. Yep. No, it should be up. Okay. So here we are. And what I want to show you first, just so that we've got all our housekeeping done. We're going to switch, actually, we'll switch this gadget, and we'll make this our scratch pad. Oh, so all the stuff I had put in here also disappeared. Okay, so let's go ahead and we're going to place a trade, and then I'll come back and I'll add these things into our scratch pad. So the first thing that I wanted to show you is let's look at a bullish opportunity. So yesterday, Micron came with earnings, and I've posted something on X on this morning because it gapped down on the open. It was down, I don't know, 5 or 6%, maybe a little bit more than that, but it's been rallying pretty dramatically throughout the day. And if you come and you look at the live news on Micron, it beat pretty dramatically on earnings. And HSBC adjusted their price target from 500 to 750. This stock's all-time high is 471. It's currently trading at 447. Rosenblatt went from 500 to 600. Susquehanna 525 to 600. And then we have New Street here, 265 to 345. It's going up, but it's like, have you looked at the price of the stock lately? Yeah, so, but when we just even glance at these, like Daiwa Securities from 350 to 700, it seems like these are, the overwhelming consensus is, it tends to be an increase in their price target, even though there's a wide variety, like from 510 to 700, or these guys went from 345 to 700. but it seems to be pretty bullish. So could we, jump on that bullish bandwagon? And the idea with a short vertical, with a long vertical, is that we're modestly bullish. And by modestly bullish, I mean, we're looking here, and what we tend to do is bracket something. So we're looking to buy a call, and this is a $445 stock. So we might not, like in our trading a smaller account, we have $30,000. We don't want to risk more than $500 on any one trade. And when we buy a call, we are potentially risking the entire amount. So we're going to buy a call at one strike, and then we're going to sell a call above it to finance the purchase of the call that we're buying, to subsidize the purchase price. And by doing that, we're putting a cap on how much we can make, because if you just buy a call, you're technically, your potential gain is unlimited. So we're going to put a cap on it, but it means we're risking less. We have defined risk, but also defined return. And that's what creates a long call vertical. And so let's come and look at the prices for Micron. So when we look at Micron, if we come out to April and we look at, if we're looking at bracketing this, so if we buy the 440 and sell the 450, how much would that cost us? If we just buy the 440, that's $3,600, $3,700. We can't afford to do that. That's risking over 10% of our total account value in one trade. So, but if we buy a vertical, so buy the 440, sell the 450, how much does this have to go up for us to have our max gain? It has to go up $3. And we're risking $500, which is coincidentally about how much we're willing to risk. And so, the market has been so unsettled lately. Our typical target is to make a 50% gain. But maybe in these times of tremendous uncertainty where a single tweet can change can have an impact on the market, maybe what we want to do is make the target a little more modest. Maybe we go for a 25% target. So if we took our $5, let's just call it 505, times 1.25 and said, if this goes up to 631, I'd like to exit. So we're going to take our single order. We're going to change that and make it first trigger sequence. We're going to right click, create an opposite order, and let's make this 635. So that's about a 25% gain. Now, could you make it a 50% gain? You could. Could you hang out and say like, hey, I'm risking 500 to make almost 500. So why wouldn't I want to go for the whole 500? And that's the way I used to think, my friends. But you know how often I got that whole $497? Almost never. I'd be up 20%, 30%, 50%, 70%, 50%, 30%. Oh, shucks, I'm now losing money. And so I decided, well, what if I wasn't greedy? What if I just said, and this is like the most length of time we'll be in this is 20 some days, a 25% return on a trade you're only in for 20 some days isn't too shabby, if we were to get that return. So we're going to put this in our long call vertical bucket, and we're putting in a more modest target, if you will, of a 25% return on our risk. And how much could we lose? $503. Are we okay with that? We are. Fire in the hole. Okay. So, we've got that filled. Now, are we expecting to be in this for 29 days? No, if it goes up dramatically for the next few days, we could be out of this in 3 or 4 days. We've sometimes put in targets that are, up 50%. you know, a 50% target and are sometimes in it less than a week. So just because our expiration date is out 29 days doesn't mean we actually expect to be in there that entire time. Okay. Okay. Now I want to come back to a note because I do want to share this information that, and I had this so nicely laid out for you guys, but in our notes, for those of you who are regulars at this class, so Connie had done an example trade on Akamai. And she rolled it yesterday as it was in the money. So she bought back the March 20th and she sold the April 13th for a 45-cent debit. Now on AMD, she rolled the March 20th to March 27th for a credit of $3.93. With EOG, she looked at it and said, you know what? We're just going to let that one percolate. So there was nothing new with that. MCHP was looking more bullish. They changed the exit order to an OCO and said, if it hits $2, we want to exit, or if the stock goes to 66.20, exit. So that was that one. And then NVIDIA was rolled from the, you know, out a week from the 20th to the 27th and to a higher strike for a credit of 236. And then last but not least was Tesla, and that was rolled as well. Okay. So I don't, you know, I didn't participate in putting these on, but these are, you know, the trade management steps, you know, or examples of how somebody might manage these that Connie wanted to share with you. Okay. Yeah, so somebody's saying, like, I think a 50% target is good. I think 65% is better. We've typically gone with a 50% target unless it's already most of the way through both strikes and it's a little more expensive, where a 50% target would be close to max gain. But with the amount of uncertainty there is in the market right now, and the fact that, you know, volatility is pretty high compared to where it has been. Like if we look at a 1-year chart on volatility, this is telling us that there's a lot of uncertainty in the market right now. Like we've only seen it this high once, twice, you know, kind of 3 or 4 times in the last year. You know, so we're not on unsteady ground, but there isn't that quiet confidence, you know, that there has been for, you know, that we enjoyed at least part of last year. And when we're looking at the S&P 500, you know, it's below every moving average that I have on this chart. And if you're looking for a diagonal resistance breakout, we are not seeing it. You know, and when we look at our pullback here, you know, we're down, you know, 6%, between 5.5% and 6% off the highs. And, you know, today down 0.5%, gap down on the open, trying to rally. You know, and the NASDAQ, you know, similar, right? So that is, and I want to do both a bullish and a bearish example, but let's look at KMI. So, you know, Kinder Morgan, if you're not familiar with this company, it is part of the energy sector. It is an energy infrastructure company based in North America, natural gas pipelines, etc. And when we look at this today, you know, we've got this big bullish candle today. And so, you know, we've had a little bit of a pullback. It's moving to the upside. If we look at the sector indices, energy has been strong. So if I look at, energy as a sector here, and we look at the last 3 months, energy's been the strongest sector. It's hitting a new all-time high today. And then if we look at the last month or the last 4 weeks, once again, energy leading the charge. And so I created a scan, and if you go to that trade management mini session and scroll to the bottom, the very bottom of that list, there's a section of turquoise thumbnails that are about thinkorswim, and I created a very simple way of doing sector scans. And so then we just looked at these stocks and said, okay, this is the strongest sector. If we wanted to do a bullish trade, where might there be some opportunities? And KMI, let's see when earnings is. April 15th. So we'd want to be out of this trade by April 15th. But if we looked at this, it's bouncing off the 30-day moving average. Today, it's up 3.2%. Could we come in and say, well, it's at 33.65. If we bought the 33 strike and then sold the 34, it would only have to go up 35 cents and then stay above that for us to, have a good opportunity to hit our target. Does it trade more than 1 million shares a day? If we're looking at the checklist we might create by looking at that example trading plan, it trades more than 1 million shares a day. The bid-ask spread is less than 10%. It's 8 cents on a $1.40 something option. Do we have lots of volume? So, we had 689 contracts on the books when the market opened, 1,200 traded today. So we're not the only ones that are perhaps bullish on this stock. So if we look at buying a vertical, it's 55 cents. And if we went with that idea of, let's bring up our calculator and say, we don't want to be greedy. We're just going to say, if we could make a 25% return, we'd want to exit when this was worth 68 cents. Now, technically, we could make a 45-cent return on this trade, confirm and send. So we're risking 55 to make 45. But again, in order to get this $45, you'd have to stay right into practically the bitter end. And so we're saying, okay, if we can get a base hit, and if we're risking $54, how many of these could we do? Well, if we did, let's say 9 of these, we're probably just around 486. So if we did 10, we're at 540. So if we say, okay, we're okay with doing 10, single order, first trigger sequence, right click. Now this, we are not taking our transaction fees into account here, and it's $1.30 a contract to get in and $1.30 a contract to get out. So 54 times 1.25, yeah, 68. 68. And so you may be saying well, that's hardly worth it. But, that's $140 if we do 10 of those, and $140, our goal in our trading a smaller account class was to make $100 a week. So that would achieve that goal if this trade is successful. Now, what if the trade isn't successful? Well, if it goes down by 25%, we're going to exit. And why am I not putting in an OCO order? Well, what I have found in trading these long call verticals in my live account is that the first half hour that the market is open, there can be a lot of volatility in the market. And then what can happen is you can get whipped out. It'll trigger your exit, and you get out with a way bigger than a 50% loss or a 25% loss, depending on what your target is. And and then the market settles down and you wouldn't have ended up stopped out at all. And so then the daily routine becomes you're going to come to your monitor tab, your activities and positions. You're going to come down, and we've grouped these by type of trade. So here's our long call verticals. Now target, we had a 50% target here, but here's our Micron. We're down 3.5%. We're down $12. Is that 25% up or down? No, neither is this. Tomorrow we'll add our exit on this one that we hadn't added because I've had ongoing technical challenges, but yeah, we're not going to, but tomorrow we'll look at, you know, and it could be that we had put this trade on and then it didn't, like I forgot, maybe I could have forgotten to make it good till canceled. And so the trade died after a day. But if we had a 50% target, which was our goal when we placed this one, it was at 260. We paid 260 to get in on this one. So we would want to get out at 390. So we would just right click on this. Actually, I may as well show you how to do this. Create a closing order to sell this when it's worth 390. We'll make that good till canceled. And now when we come in and we look at this, there's a chiclet beside every order. So we know we have an exit in place. Okay. Okay. So that's that. Let's go over to the bearish side of the street. So Coco is saying, like, how long after the market open do you recommend starting the management function? You can check these daily, and I would say, you know, I would look at that, like maybe give the market half an hour, and then you can have a look. So Paul is saying, are we going to do any bearish trades today? Yeah, I thought we'd start with looking at Tesla. And some of you may say, excuse me, excusez-moi, I love Tesla, please do not be bearish on Tesla. But, you know, when I looked at this a few weeks ago, I had kind of drawn this pennant pattern. So we have a series of lower highs, but we had some higher lows. And we're looking for, you know, is it going to break to the upside or the downside? And yeah, went to the downside, folks. And if you said, well, why did you draw your line there? Well, because I drew it a couple of weeks ago. So if I were to draw it now, I would still, you know, have drawn it like that. It's still breaking to the downside. And so can I do the same type of thing that we just did on the upside? Only, you know, this time what we're going to do is we are going to buy a put. And again, we're going to bracket. So if it's at 382, we'll maybe buy this 380. And again, this is 380 bucks, my friends. Like, we are not in the cheap seats here. So if we buy the 380 in order to fund the purchase of buying that put, then we're going to sell either the 370 or the 375. And so we're capping our potential gain, but we're also, you know, making it more affordable. Okay. So, and this is what I mean. So when you come to, if we come out to April, we've got this 385 strike. We do have $5 wide strikes. Again, does this trade more than 1 million shares a day? Check, 29 million. And we've got hours, you know, to go. Do we have lots of volume on these contracts? Tons, like thousands of contracts traded just today alone, thousands on the books. And so, but this is an $1,800 contract. That's a lot more than the 500 we're willing to risk. So it's really not in our snack bracket. But, you know, so are we like super bearish here? No, we're just saying that we think it could fall below 380 and it might stay below 380 for a hot minute. but our expectation is that this might continue to fall. And so we are looking at, again, buying a vertical. And if we do this $5 wide spread, we're risking 230 to potentially make, well, it's saying 275. Now, could we wait for the 275? We could, but if we want to be kind of small, nimble, and quick, and we say, hey, if this is 230, we could do 2 of these. So we're now risking 460. And if I take my 230 and I multiply that by 1.25, let's call that 287 or 288. Well, and we're live in the market, so things keep changing. 228 times 1.25, that's what we're going to go with. So 285. So I'm going to take my single order, make it first trigger sequence. We're going to right click. My prices keep going all over. And if this is going up, that's actually kind of a good sign for us, right? 235 times 1.25. I'm going to make this 295. Good till canceled. And again, you're going like, hey, we're going to make like $60 a contract, $120. Base hits, baby. If you can hit, like if you have a 400 batting average, which means you get on base 4 out of 10 times you're at bat, they will pay you millions of dollars if you're a baseball player. Okay, so this is a long put vertical. And how much does this have to move? About $2.43. If you're saying, well, like how much does Tesla move in an average day? Well, over the last 14 days, Tesla on average, the range of movement is $13. So, is it a stretch for it to maybe move below 380 in 29 days? Yeah, no, dude, not a stretch at all. When we look at volatility, this is a pretty high, this stock has a lot of volatility, 46% on this, like as opposed to something like a Coca-Cola, which is like half, which is half. Okay, you want to see another bearish example? So let's go to Lennar. So Lennar has been like rolling down the hill. We can see here, high, lower high, lower high, lower low. Like, a couple of days ago, we hit, a 1-year low on this. So, if we look at Lennar, and I call this like a classic bear flag, came down, rallied for a few days. Yesterday, we had a close below the low of the high day, which would be our entry. Now, let's come out to the trade tab. Now, when I look at this 480, 530, that's like marginally acceptable. And here 1476 contracts traded today. So we've got enough contracts. This, typically does trade over 1 million shares a day. We're at 751 and still early in the day. So this being 50 cents, this is a little too wide. So you might say, well, maybe we do the 95 and the 85, but then it has to move a lot further, to get down to this 85. And so you might just say like, hey, this is like a 50 cent, that's a 20% spread. And so if you're saying, you know what, that's just too big a spread. My rule says I don't want it to be more than 10%. And this second strike, it's just too wide for me. So I'm just not going to do that. Unless we could do the 100 and the 95, it's already through both of those strikes. Because these bid-ask spreads, are acceptable. So, you never know, might be possible. Well, this is at 330 and it's already below both strikes, which means if it just stays below both strikes, we're okay. Like we would have a profitable trade. And so like how much, if we want to make, it's 330. So we could make up to, 330 minus the $5 is $1.70, 170. But what if we said this 330 times 1.25, that would be like 412. So we would still, that's not that close to max gain, which would rather be, right? So if we say, okay, we could do that, we can only do one contract because we're risking $330, but it's already through both strikes. And so this makes it a higher probability trade. Like when we look at this, you've got an 84% chance. Well, I don't know why it's saying 84% because it's below that now, but this is probability of touching, saying there's a 60% probability of this being below 95 come April 17th. Okay, so we're going to right click, create an opposite order, and we're going to make this 415. Good till canceled. I put this in as a way of eliminating a trade because the bid-ask spread was too wide. And then I noticed that the strikes above were potentially within our trading rule set. So that's a long put vertical for that. And this is, our goal is a 25% target, profit target. If you want to put a note in from you to you, there you go. Okay, so that's Lennar. Now, wanted to look at one more. Would you guys like to see one more example trade? So I don't calculate. So somebody's asking, like, do you calculate how much the stock has to move to hit your target? I do not. But what we are doing is we're just trying to go with the flow of the trend. Like this stock is down 11% year to date. It's been downtrending for months. Now, that doesn't mean that there haven't been periods where it has rallied. But, really since February 13th, so for over a month, it hasn't had more than 3 up days in a row. And when we come and we look at Tesla, it's down 20% year to date. So we're just, kind of just trying to jump on that short to intermediate term trend and just kind of go with the flow of it. And the same thing like on the bullish side with Micron. With Micron, I mean, holy smokes, Batman, this stock is up 53% year to date. So we're just trying to, jump on the back of this galloping horse for just a hot minute. And we've decided to jump on after it's pulled, post earnings, and looking to just take it on a short ride for a short period of time. Okay, so I thought we'd do one more bearish example. And let's look at Microsoft. So here's another one. And, I'm laughing only because I am using, a computer that I said to somebody yesterday, I'm glad I don't live with my brother who lives on the lake because I would have been tempted to take this thing and chuck it in the lake. Of course, now it would be bouncing because my brother lives 250 miles north of Toronto and it would be hitting ice, and just skidding. But, Microsoft is on the struggle bus. I mean, it is down 20% year to date. And, when we look at, up close and personal, it tried to rally. Like, it had a little bullish run here. And then it came up against the 30-day moving average, which it has had trouble getting beyond. For the last 3 months, it has it got above for, 2 whole days. And this turned out not to be a breakout. It was a fake out. And then it came and it's been bonking its head. And, we had this 1-day rally. Yesterday, we had a close below the low of the high day. and it's continuing on. So could we do this same kind of thing? And just, we don't need it to go down a long way. So we're being kind of modestly bearish is how I like to frame these. If we did the 390 and the 385, it would have to go down by, about $4. But, could we do the 395 and the 390? We might be able to do that again. Maybe we can just, it doesn't hurt to look. Well, holy smokes, Batman, it's already through both strikes. Oh, I did it the wrong way. We want to buy. 248, and it's already through both strikes. Okay, sign me up. So, and again, if we're trying to be modest and just saying, okay, it's 245 times 1.25. When this gets to 306, we're going to do 2 contracts, single order, first trigger sequence, right click. I like it better with the 50%. I find the math easier to do. It would be 360. We're going to create an opposite order, but we're just trying to, we're going for base hits here. 306. Oh, let's make it 310. Good till canceled. Confirm and send. Long put vertical. So today, and here our target is a 25% profit. So when you come back and look, and I haven't seen a survey today, but often when there are surveys, one of the questions or suggestions is please review the trades at the end of the day. And so, what have we done here? Well, we'll discuss in trading a smaller account, the American Express and JP Morgan trades tomorrow that we are now out of, but we placed 2 bullish trades. So 2 long call verticals on Micron and Kinder Morgan, KMI. And then we did 3 bearish trades, 1 on Tesla, 1 on Lennar, and 1 on Microsoft that hasn't filled yet. And now it's saying they want 245. So we can just come in here, cancel and replace and say, okay, I'll give you 2 more pennies. Oh, there we go. It got filled. Okay, so we're in on Microsoft. So we did 5 example trades today. Now, if you want to follow up on those trades with me, then come to the Trading a Smaller Account class on Mondays and Fridays. So we'll be meeting tomorrow at 10 o'clock Mountain, noon Eastern, and I will mention these trades that we have done. Keep in mind that if you have been following along in your paper money and doing the example diagonal trades, then, Connie gave you several examples of how a trader might manage that. And we went over those. And hopefully my gadget still has those notes here for these trades: Akamai, AMD, EOG, MCHP, NVIDIA, and Tesla. So we squeezed a lot into our 45 minutes. I want to thank Ben Watson for his assistance in the chat today. It's always great to work with Ben. Thanks to the guys behind the scenes who helped bring this class to life. And thank you to each and every one of you for showing up and being so participatory in the chat, to Wiley and Richard and Greg and Will and Coco and the rest of the gang. Thank you all for being here. Connie, I do expect will be back for this class next week. So, and then stay tuned. There's lots of great content still to come today. So stay tuned. Lots still to come. Take care, everyone. Bye for now.